Good evening and thank you for joining us on the program Capital Market. I'm Temple Ashaju. We'll go straight to business now and start with the news where Nigeria's infrastructure gaps possess wide opportunity for public and private sectors investments through the financial and capital markets. The Nigeria's immediate past Minister for Power Works and Housing, Mr. Babatunde Fashola, and an economist, Mr. Kehinde Durosimieti, underscored this message at a forum asking Nigerians to maintain optimism on the markets.
We misinterpreted investment banking to whiskey banking. A lot of what happened in the 90s and 80s where a lot of young bankers did deals on transactions and left the banks wanting, basically, and pocketed all the money. But investment banking really, as expressed in our book, and I'm sure you'll see, is really what underpins the financial markets.
An increase and a commitment to spend more on infrastructure is something that all of us should welcome, because the quality of infrastructure will ultimately determine the quality of our lifestyle. There is a deficit funding, there's a gap in financing, and there lies the opportunity for investors, for bankers, for capital market operators, and all of the people that this literary feast will address by the reviewers today.
Well, an economist, Mr. Temitope Oshikoya, has challenged the federal government to come up with a long-term economic blueprint that will guide investments and development planning for Nigeria. Mr. Oshikoya, who co-authored a book with Mr. Kehinde Durosimieti at the event, asked that Nigeria's capital market is a preferred investment destination, and says that the economic recovery and growth plan remains a short-term document.
I think the ERGB, to be honest, is a short-term document. What we need is a longer-term document. If you look at in places like Indonesia, they have a long-term framework, 30 years. The same thing in places like China, of development planning. Now, the ERGP was responding basically to the economic recession that happened between 2015 and 2017. And even with the ERGP, what you need is execution, execution, execution. Without proper execution, we will not be able to move forward. So, over the longer term, the market is very important, but you also need efficient and effective development planning framework that can be used to guide citizens, the market, as to what the direction in which we want to go to over the longer term. And as far as I'm concerned, I've always insisted that you need to get institutions, you need to deal with issues of insecurity, you need to deal with issues of infrastructure, you need to deal with the issues of investment. And all of this plugged into this book on frontier capital market and investment banking. Because you need to be able to raise capital to finance infrastructure. The commercial banks cannot do it. We need to be realistic about this. You need long-term finance to do infrastructure, to do industrialization. And a frontier capital market like this shows us, a book like this shows us what debt underwriting is all about, what equity underwriting is all about, how to raise capital in the market, and how to deploy capital and manage capital very effectively.
Well, the NHIS Securities Exchange had a field day in 2018, given the performance of the trading platform in the financial year. And of course, it seeks to maintain that record with the introduction of some new products. In a chat with Channels Television after a meeting of the board and of course the investors, the chief executive, Mr. Bola Jamale, explains the need for urgent economic policies and of course direction of government in order to boost the markets.
We had two major shifts, both of them positive shifts or shifts in the right direction. We saw essentially the end of the recession of 2017, and so in 2018 trade numbers tripled at least. So we had a total sale kind of transaction income of about 170 million as opposed to about 50 million in the previous year. Again, on the expense side, we also crushed our costs significantly by changing platforms. So we actually deployed Nigerian technology to run the market and our trading platforms. We also came up with some new portals and platforms, and all of that crushed our costs by about 60, 70 million. And so both of them working together, we ended up changing from a loss position to an actual profit position. Modest profit, but I mean, we're very happy that we have broken the back of the tone that we had before. We're now moving forward into what hopefully will be a sustainable income and what would allow us to actually go out and develop a better market for both investors and issuers.
Are there dividends payouts to shareholders this year? Because you actually had a development where remuneration for directors, got a facelift.
Yep. So this is fortunately the first year that we're going to be able to make these kind of remuneration payments. We're hoping that we can continue. In terms of paying dividends, obviously you need to make sure that your reserves are fully positive. Otherwise, you will incur some other expenses, some other charges, like excess tax charge and so on. If you start paying dividends before you have cleared your revenue reserve. So we still need to do a bit of work on our revenue reserves. Hopefully by the end of this year, we'll be telling a different story. But at the moment, no, we have not paid a dividend, not this year.
For the greater part of last year, and I think the year before, the initiative of tradability of the football clubs, was left hanging. Are we reviving that in this calendar year?
Oh, yeah. So we knew about 2 years ago that we've sensitized the clubs, we've sensitized the chairmen or the management of the clubs, and we could tell that a lot of it is going to be political. There will be some political decisions that have to be made, especially when well, it's something that they wouldn't want to discuss anymore by the time they're getting close to elections, and that played out. Now that the governors are in place and they're settled, really football is not one of their priorities. And certainly funding football clubs is certainly not going to be the first demand they want to have on their desk. So this is the time when we are actually starting to go back to them again, and we hope that before the end of the year we might see the first ones coming into the market.
What's your outlook for 2019?
Nation, I think we can move we should move very quickly to put our ministers in place to articulate a direction for the economy, and then we have a very good chance of even changing our growth numbers. I think that the longer we delay, it's an opportunity that we might be losing, and as a result, we would stagnate into the end of the year. There's a very great possibility of that. For us at NUSD, we have quite a few new rules, new products that we want to roll out before the end of the year. And so we're looking forward to a very, very, very active year towards the end of this year. Yes.
Well, Seplat Petroleum Development Company, PLC, of course, a listed one on the local bourse, has announced that its gas plant project in ANOH, Imo State, will bring about gas sufficiency for the domestic markets in Nigeria. Of course, that's an initiative being carried out in collaboration with the federal government through some investments, equity investments, via the NNPC, the state-owned oil company. We spoke to the chief executive of this company, Mr. Austin Avuru, who gave us some explanations regarding when the first sort of gas will be released. That's the first quarter of 2021.
The ANOH gas project is one of government's 7 critical gas projects to deliver the needed 3 BCF of domestic gas supply in the next 3 to 4 years. And we are proud to have partnered with NNPC itself into a special purpose vehicle called a GPC, where the equity holding is 50% Seplat and 50% NGC. And that is the vehicle that is delivering this project. It is critical for us commercially, it is critical for government, it is critical for the Nigerian economy. First gas is scheduled for Q1 2021, which is less than 24 months from now. and that will be delivering between 250 and 300 million scf of gas into the domestic market. Our entire gas business, and that's something we're proud of in Seplat, our entire gas business is dedicated to the domestic market. Our focus is to increase domestic energy security. So our LPG production, the lean gas production, they're all targeted for the domestic market. Because we have the West African gas pipeline that can deliver some modest quantities of gas into the West African market, that is a secondary market for us. Some modest volumes can go into that market, but our primary target is the Nigerian domestic market.
CEO of Seplat there. Well, listed pharmaceutical manufacturing company Feedsin Healthcare is executing a strategic alliance with Ohara Pharmaceutical Company of Japan. In a notice to the stock exchange this week, Feedsin explains that the alliance stems from the recent rights issue, which sees Ohara's shareholding in the company increased to 21.57%. The partnership is aimed at supporting Feedsin's commitment to the provision of latest healthcare products and services in the Nigerian markets. And more company news, one of Nigeria's leading insurance companies, Royal Exchange, has notified the local boss of its readiness to partner with a German establishment, Insure Resilience Investment Fund. The process will result in the acquisition of some 39.25% stake in Royal Exchange General Insurance Company Limited, a subsidiary of the parent company. With the acquisition, both firms look to reach out to more than 1 million small-scale farmers in the country. And the Securities and Exchange Commission has granted no objection approval to the proposed scheme of merger between Lafarge Africa plc and Lafarge Ready Mix Limited. The listed entity, Lafarge Africa, made the notice known to the Nigerian Stock Exchange on Friday, adding that the approval also encompasses the enrolled order of a Lagos High Court on the proposal. So now let's do a bit of market review, see how the markets ended for this week. Of course, we'll begin with equities, which is the representation of the Nigerian Stock Exchange here. All share index for this week settled lower again, down some 2.27% to 27,919.50. This week alone, the market moved all the way from 30,000 through 28,000 down to 27,000 psychological mark. And of course, the equity capitalization for this week came in at 13.607 trillion naira after the market lost some 1.08 billion units of shares, and of course that represents some 13.390 billion naira. Total deals for this week was 15,774. In terms of the sectoral performances, all the sectors fell to the south. The banking segment was down by 4.30%. The consumer goods market was also down marginally, some 0.01%, and that's after Nestle and a few other consumer goods giants made some recovery from the losses that was recorded earlier in the week. The industrial goods market was also down by 5.17%. After Dangote Cement, Lafarge Wapco, and of course CCN all recorded some losses. The insurance side of the market was down some 377 basis points. We see the likes of Wapik and a host of other insurance companies closing southwards for this week, and that impacted the performance of this segment. Oil and gas was down by 5.7%. And for the unlisted securities markets, which is encoded the NHIS DOTC there, you have a decline of 0.43% for this week. Market capitalization settled at 522.8 billion naira after we saw investors exchanging transactions across from 1.22 million units of shares valued at 130.38 million naira. Top traded securities include CSCS and NDEP, and of course WAMCO, which declared some 6 naira 36 kobo dividend, and of course paid to investors this week. the fixed income market was not too good yesterday, but for the greater part of the week, it did so well. Well, there's so much more for us after the break. Join us shortly. Welcome back to the program. It's Capital Market Live on Channels Television. Well, following the restructuring of the Office of the National Health Insurance Scheme earlier this month, the need for President Muhammadu Buhari to urgently assent to the Health Care Insurance Commission bill has been brought to the fore. We had a chat with the Chief Executive of Avon Health Management Organization, Mrs. Adesimbo Okiri, who tells us the need for that sector, HMO specifically, to experience some kind of recapitalization exercise.
Healthcare is important for every country in the world. You would see that there is actually a relationship between the state of the health of the population and the level of productivity and economic activity that goes on in the country. So, I mean, in Nigeria, we're struggling. We've been struggling for quite a while with our healthcare sector, and we have lots of issues with it. But I'm happy to see new developments. I'm happy, Avon Healthcare Limited is a health maintenance organization. We're at HMO. So we're very relieved with the recent announcement of a new executive secretary to the National Health Insurance Scheme. So this is a movement in the right direction. So we're happy for it. And we're looking forward to what else the new administration has in store for the healthcare sector.
So it's good to know you actually mentioned the NHIS because that's an institution that just got kind of restructured. With the coming of Professor Mohammed Sambu now as the new executive secretary, what are your expectations from him? We know that there's been a whole lot of turbulence in that regulatory space.
Our expectations are actually quite high because he used to be part of the NHIS. He had worked in the NHIS for many, many years in the past. He'd worked in various parts of the country as well. So initially, at some point, it was the AGM in charge of the Southwest region. He was based in Lagos. He's been also an AGM overseeing, the administrative work going on in the Northwestern region as well. He was based in Kaduna. He was also in charge of, I think, the first initial launch of the community health insurance programs that the NHIS did way back then. So he's someone who's very familiar with the NHIS as an institution and with the relevant stakeholders that makes what the NHIS is seeking to achieve for the country, the stakeholders that the NHIS works with in order to achieve success. So he's someone we're very happy to have on that seat, and we're looking forward to great things that, he will achieve. But I must say that we have our own expectations. We have what we hope he will focus on. And the first of this is the regulatory framework under which we operate. Earlier on this year, in about April, there was a National Health Insurance Commission bill that had passed all the readings in the House, and the House of Senate had passed it on to the President. We're hoping for three things from this bill. The first thing we're hoping for is that health insurance will be made compulsory for all Nigerians, because that's the only way to achieve universal health coverage. We're also hoping for a clearer articulation of the functions of the NHIS as a regulator. Right now, the NHIS sometimes is very often confused. It's an operator as well as a regulator. It's an operator that competes with other operators like us. An operator cannot even regulate itself, so it shouldn't exist as an operator. It should be a regulator. Sometimes as well, it also acts like a fund manager because there's so much money that it has in its coffers. I think all this it creates conflict of interest, lack of focus. So we are hoping that the National Health Insurance Commission bill that is awaiting presidential assent will address these issues. There's also the fact that in recent times many state governments have started their own health insurance schemes, which is amazing. It is what we want to happen. But all of this still has to be regulated within one common regulatory framework, and all the funds that are accumulated need to go into one universal national pool of funds so that we can effectively reach every nook and cranny of the country. So these are the three things we're hoping for within the National Health Insurance Commission bill, and we hope it will soon be signed into law.
So you actually talked about channeling or managing of some pool of funds to get the industry going better. How would you want that to be managed? Do you want it taken back to the central bank, or you want a new institution created for that?
Honestly, that is not an area that we would want to concern ourselves with. We just what we would like to see is to ensure that the funds are being administered for the use and the intention that they were accumulated for. So, for instance, we need to be paid on time in order that we can make the relevant payments to the hospitals. We need to have, adequate data. I mean, this brings me to another area that we would like the new ES to also focus on a bit, and that's got to do with, the IT infrastructure, as well as the accumulation of data and the consolidation of data of everything that occurs within the National Health Insurance Scheme's purview. We HMOs are obligated to submit annual audited financial statements. And for every other industry, this is public information. You can go to NICOM now, and you would get the published annual statements of all the insurance companies. You could go to CBN and you get everything for the banks. You can't go to the NHIS and be able to retrieve any audited financial statement for any of the HMOs. I think this is part of what we think the ES needs to look at. He needs to look at reforming the entire sector. He needs to look at the financial strength of the players that are within the sector. He needs to look at capital adequacy. He needs to look at liquidity. He needs to look at, what they have in their reserves. He needs to look at the risk management frameworks within which they operate. And you'd find out that most likely about 60 HMOs that exist right now, if he were to apply international standards of financial strength and capabilities to them, maybe we would reduce to 12, maybe 10, who knows? But, yes, so recapitalization and, more stringent liquidity framework for us to operate within. When this is done, then, there will be less focus on who has what funds, who keeps what funds. We should be able to manage our operations with the capital that we have invested in our companies. And if we're, operating as a pass-through for the NHIS to pay to hospitals on plans that are within the purview of the federal government or the state government, that's all we should be. We're not investors. We shouldn't be angling to invest, funds that are meant to look after the healthcare of people.
And talking about reforms and recapitalization, how much do you think can be achieved given the constraints that we have in the economy right now? You have the banking sector recapitalization coming up. You have the broader insurance space recapitalization. You have micro finance banks recapitalization. And here you are suggesting a recapitalization in the HMO segment of the economy or of the market.
I think it's absolutely an imperative for us to get this kind of reform done. I mean, if we just compare the adequacy of capital across all these three sectors that you mentioned, for instance, you have HMOs, capitalization requirement for HMOs is 400 million. In life insurance, for instance, they've just issued a new regulation that requires the minimum capitalization for companies to engage in life insurance to move from 3 billion to 9 billion. I mean, HMOs at 400 million, what are we talking about here? At the end of the day, money will go where there is an assurance of return on investment. And I think for too long as a country, we have continued to view health as a social good and not necessarily as an area that is ripe for business opportunities, that is ripe for investment. And once we put all the necessary framework in place, we have an effective and efficient regulator, we will be able to attract investment into healthcare and precisely into healthcare management. And I think this is something that we simply need to do. Penetration is so low. It costs money to invest in IT infrastructure. It costs money to invest in the marketing and the awareness that drives change in consumer behavior. If we don't have the right levels of investment, I fear that we would still be just scratching the surface.
Well, there's a whole lot to watch out for next week. That's where we'll make it a wrap, of course, this weekend. Of course, next week again is the CBN MPC, Monetary Policy Committee meeting. That's something you have to watch out for. There's been a whole lot of predictions as to the CBN reducing the MPR or not. We'll see how that pans out next week. That's it on the show for this weekend. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.